If you want to see the biggest returns in the mining sector as a stock market investor, what you want to be targeting is exploration stocks that are really low value with the potential to increase to a much larger market cap. Now, with the high reward obviously comes the high risk as well, so you need to weigh up those factors. But today, what I'm going to be sharing with you is my top 3 lithium exploration stocks that I think could generate value for investors in the future. Let's take a look. How's it going, guys? Ryan here and welcome back to another stock market investing video, and today we are talking about lithium exploration stocks. In particular, I'm going to be sharing with you my top 3 lithium exploration stocks of 2023 that I believe could generate some really good value for investors in the future. Now, just to touch on why we're looking at these stocks, it's because they are honestly some of my favorite exploration stocks I've been in since I started investing. I've made some absolutely massive wins off them, but I've also had some big losses as a result, and that is due to the high risk, high reward element. When we're looking at these types of stocks, what we see is there is a lack of information, and that increases the risk for investors, but it also makes those stocks cheaper to buy in early on, which, if you do pick the right ones, can generate massive amounts of value. I've gone through and picked a few of the stocks which I think will really generate that value for the investors that are on the lower risk side, due to the fact that they have already got some relatively decent results and decent potential moving forward. So without any further ado, let's jump into the first stock. The first stock we're going to look at today is Winsome Resources. Their ticker on the ASX is WR1. Right now they're sitting roughly at about $2.30 per share, but their market cap is still relatively low, and that is sitting at about $325 million Australian. Now, to put in perspective the sort of growth we have seen in an exploration stock like WR1, we have seen a 1,100% increase in the value of this stock in just the last 6 months alone. That in itself proves the value you can get out of these stocks for investors. And now, whilst this is still an exploration stock and we're going to be focusing on their Adina based project in Canada, there is still a massive amount of potential as we move into those development stages for WR1. So let's take a look at the Adina project. Now, the Adina project was originally mapped back in 2016 after they performed a successful drilling of 10 maiden holes, and this covered roughly about 1,726 meters, and it was completed in the year of 2018. A 2-kilometer potential strike was found, and this was due to the fact that they located a pegmatite ridge. And of course, as a result, they continued their drilling operations at this project. And more recently, the reason we have seen that huge spike in the value of WR1 is because of the really impressive results that we have seen thus far. In fact, in one of their latest drill programs, we saw a hole which was 107.6 meters intercept of lithium with an average grade of 1.34%, which is pretty good. If you've seen some of my previous videos, we're typically targeting that 1% to 1.5% range. So for that sort of a distance and an intercept of 107.6 meters, that is very significant. Within that intercept as well, they hit 2.21% of lithium oxide over 30 meters. This is absolutely massive, and it is a very high grade hole as a result. Now, as a result, of course, of this massive intercept, what we did find was that the company wanted to expand their drilling program as a result, and that was from 5,000 meters to now 20,000 meters. Now, according to WR1 themselves, there are 7 different reasons as to why this is such a significant company. Whilst they have, number 1, hit that massive high-grade hole in the Adina project, they also, number 2, have a portfolio of 5 hard rock lithium assets in Quebec, Canada, as well as other operations as well. They certainly have government support being in Canada, and it is also one of those jurisdictions which is relatively low when it comes to sovereign risk. They have ready access to hydropower, and of course they as well have a cornerstone industry investment from the Lithium Royalties Corporation. Finally as well, they are certainly a big growth play when it comes to looking at lithium stocks themselves. As we know, the lithium market is very hot in Canada. It is of course hot as well, but it is not an oversaturated market at this point in time, although it is considered busy at the moment. But given the fact that we're going to see massive spikes still in lithium demand moving into the next decade, we are going to see that this sort of company is very valuable. Taking a deeper look at the chart of this company, you can see that the gains that WR1 have enjoyed are massive. That 1,100% gain in just under 6 months. Absolutely huge. And you can see right now they are on a very, very good trajectory. They are basically moving up in a pretty solid upwards direction. I'm going to just put in place a little chart right here, and I'd suggest this is, I guess, the channel we're moving up in at the moment. You can see it dropped out briefly, but the big drop was then followed by a big, I suppose, growth period where we got back into this really significant uptrend. We've just hit the top end of that as of today, and we had an all-time high today, which is absolutely fantastic. Keeping in mind this is recorded on the 1st of February, and that was $2.52. Really strong growth. If we're able to maintain this channel, we're going to see that growth continue, and it will be quite explosive. The thing to keep in mind with WR1 is, yes, it has already experienced a massive portion of growth, and there is always the risk that with a massive uptick in the value of the company, there is also going to be a drop at some stage. This is just the natural progression of any stock when it comes to charting if it moves too quickly in one direction. But when you consider the fundamentals of this company having such a high grade region for lithium and hitting those monstrous holes, I really can't foresee them dropping too much. And if for you this is a long-term play and WR1 do move into development and of course then into production eventually, you're going to see that the value of WR1 hopefully moves up very significantly from this point. If we look at many other producers of lithium at the moment, they are multi-billion-dollar companies, whereas right now we're only sitting at roughly around that $325 million market cap amount. So there is still plenty of growth potential there, although you might not see, in the short term at least, those massive 1000% type gains, but you could be lucky enough to see 100, 200, maybe even 300% if you are holding this stock from this point in time, and WR1 of course continue in the right direction. Moving on to the second stock, and this is one which has only just recently come onto my radar, and that is because they had an absolutely enormous result when they hit some big grades of lithium underground. I'll get into that shortly, but firstly, kicking it off, they're sitting at about $1.70 Australian at the moment, and this stock, when you compare it to WR1, is a lot more expensive, sitting at a value of about $1.65 billion Australian. But when I show you these results, you'll understand exactly why that's the case. PMT just hit some enormous grades at their CV5 Pegmite in Quebec, Canada. These are, of course, unfortunately very deep underground, which will impact their strip ratio, but the results are as follows. At about 219.1 meters to 271.2 meters underground, they hit 52.2 meters at 3.34% lithium oxide. These grades are higher than places such as Greenbushes, which is absolutely amazing. And within that intercept themselves, they hit 15 meters at 5.1% lithium. Absolutely ginormous, and the economics of being able to actually get down there and get that out could be very, very significant financially for investors. There's also another part that I'd like to share with you. This is a different hole. It was 250.8 meters to 382 meters underground, so 131.2 meters, and that was at 1.96% lithium oxide, including 57 meters at 2.97%. That as well is an absolutely monstrous hit, and you can see that the value of something like this, when you compare it to other exploration projects on the market, is absolutely huge and blows them out of the water basically. It is absolutely amazing. Taking a quick look at PMT's chart, as you can see, there's not actually too much data as they've only recently listed on the ASX, but what I am expecting to see is a cup and handle style pattern form itself, starting from there and moving back down in this direction. And the reason why I think it's going to move down that far is because we've got a gap here, and the gap goes all the way to the day high of the 27th of January, and that was $1.40.5. So I'm expecting what we're going to see is a bit of consolidation to at least close the gap after such a significant run, and then what we will hopefully see is an eventual breakout of this stock. Coming in third, we have our final stock, and that is Power Minerals. Their ticker on the ASX is PNN, and they are certainly the cheapest stock out of the three. Right now, they are sitting at a value of 50 cents per share, but their market cap is only $35 million Australian, and that is because they are in the very, very early stages of exploration. Now, they have many potential projects, but the one I want to focus on is their Salta lithium project. This is based in Argentina, and it is a brine-based lithium project. And right now it sits within the Lithium Triangle, a very, very interesting place as it holds some of the best grade and largest resources when it comes to brine-based lithium projects in the world. And what makes this so attractive is that there is some prior research that has been done, which I'll go into, as well as it is one of those stocks which does certainly have the potential to become a lot more significant if the results from their current drilling program and test results do come into fruition. A bit of background on the Salta project. It is 100% owned by Power Minerals themselves, and it consists of 5 dried salt lakes. As I mentioned, it exists within the Lithium Triangle, and for those who don't know, the Lithium Triangle is Argentina, Chile and Bolivia within those 3 countries, which holds 65% of the world's current supply of lithium at this point in time. Now, what benefits this project is it has high levels of elevation and is geothermically active. There are high evaporation rates as well and low precipitation, which does not mean that they won't get flooded out, but the potential for that is significantly lower. There's also an existing JORC resource that has 239,000 tons of lithium carbonate equivalent, or LCE, and that is measured at a 63% measured, indicated and inferred rate, with grades up to the value of 313 milligrams per litre of lithium. They are currently undergoing a drilling program at the moment to hopefully expand that JORC resource as well, and pending the results are successful, we are likely to see an increase in the valuation of this company as a result of increasing that JORC resource size. Now obviously this is the highest risk project out of the three that we are looking at, as it is certainly in the earliest stages. But what you do certainly have to remember is when we're looking at these exploration projects, the previous two that we had seen have been in this position before, albeit they are hard rock lithium assets. They were once companies, of course, of this scale where we do not see any big results, but this is where, of course, you make the largest amounts of money as well if you are able to get in early, and they do manage to hit those successful results and successful grades. So let's take a quick look at the chart. This is the Power Minerals chart, guys. As you can see, it has actually been quite volatile, and that is due to many announcements and of course the low market cap of the company. At its peak, we saw it over here on the 19th of April, and it hit a value of 97.5 cents. Right now sitting just above 50 cents, but what really strikes me about this chart is the long-term trend that is in play at this point in time. So let me just show you that one there. What I'm going to do is basically chuck in this bottom line, and as you can see, this is a key point of support for PNN. We are moving in an upwards direction quite aggressively, which is fantastic. If I did replicate this line and move it to the top, you can see that once again this is a nice channel. But from a shorter term perspective, what I'm finding interesting is if we take the peak here and we start moving in a downwards direction, what you'll notice is the price action is starting to get tight. Now, as we all know, when the price action gets tight, we're going to experience breakouts. So what I'm anticipating, given we're in a long-term uptrend and it's getting tight down the bottom, we're likely going to at some stage break through that top and downtrending line short term and continue in our upwards trajectory. Of course, if PNN did see some more positive fundamental use, that could happen sooner rather than later. There is still plenty of time for this to play out. Worst case scenario, bad news does come out, and unfortunately the trend does fail and we move downwards a bit like that. But more likely than not, what we're looking at from a technical perspective is of course that long-term trend, and if that is maintained and the news is positive, we should continue upwards. That wraps up today's video, guys. I hope you did enjoy it. I'd love to hear your thoughts on what you think are your top 3 lithium exploration stocks in 2023. Of course, if you did enjoy today's video, make sure you do leave a thumbs up. And if you want to see more of this sort of content, hit subscribe and turn on those bell notifications. I'll leave it there for today, guys. I hope you have an awesome day. I'll see you next time. Cheers.